Welcome to the Service Experience Podcast. My name is Yoni Lavi. I'm the CEO of Qtrac, and this show is where we talk with leaders about the in-person service experience. Most companies have digitalized their online channels, but the physical visits is still a blind spot. We explore how leaders are turning that blind spot into an advantage, using real-time data and creating a higher value experience, both for customers and the associate.
What we strive to implement, and we are in the process of looking how we can enable this, is when you come in on a digital channel, I can track every transaction, every visit, every opportunity of where your needs might be. When a member walks into a branch, the level of tracking that's enabled in how much did they have to wait? How many times did they get routed to the wrong person? Yeah, for sure. So, Yoni, for me, I am a financial services technologist who believes in solving business problems through the enablement with technology, have deep expertise in building digital and consumer experiences that link across the two worlds to help enable the best service to the members and customers. I've primarily worked in the credit union space for the past 4+ years. And before that, I was working at USAA, which was a member-based organization as well. So serving financial services with the member lens is what I bring in. And how do you bring and break the cultural barriers across different channels to give a holistic experience to the members is something I'm super passionate about.
That's a critical component. I'd love to follow up on that. So you have this very extensive experience in large-scale engineering. You've worked at non-credit union enterprises and kind of rolled into transforming the credit union world and experience. Can you tell me a little bit about how that evolution took place? And if there was anything you needed to unlearn once you moved into the credit union space?
So, very interesting point you bring up. Serving at an institution where the customer base was largely military and there was one branch only, and it was a majorly digitally orchestrated experience, was a very great learning in how you enable digital experiences for people who do not have access to branches and are deployed throughout the country, right? That was one perspective that taught me. And I had to unlearn some of that as I joined the credit union space, because the mission here is still serving members, but it's serving the underserved. And the role that branches play in serving the underserved is very different in terms of the digital savviness, in terms of the hand-holding that a customer for a credit union might want, and the number of branch visits. Some small stats I might share is, of course, people want to do the value-added transactions in the branches, but for credit unions, the open rate for accounts still remains much higher in the branches than it's on the digital side, right? So acknowledging the need for the correct customer base and creating the right channels to service them through based on the target audience is very important part of engineering the experiences based on the institution that you are serving. Whereas, like I mentioned, in the military space, they don't have access to the branches, so you have to serve them best in the channel that makes sense for that experience.
Fascinating. And of course, being able to offer multiple channels for service is critical because people have different preferences, different demographics behave in certain ways. So I really resonate. It resonates with me what you just said.
Yeah, fair.
And then, of course, when you're modernizing credit union, let's say tech stack, how do you decide what genuinely belongs to a core system of record that's handling more, I would say, mission critical financial transactions versus the layer around it, which are more experiential, might integrate, might not? How do you strike that balance in your role?
So that's a very good question, and also depends on the maturity and the size of the institution as you look to engineer that. I have seen grading in terms of you start with the core experience, and most cores offer some kind of experience, especially for the branches and the tellers, as part of that built-in experience. And engineering that to serve the member needs is important, but as you grow as an institution, having seamless experiences across all channels and connected experiences all across all channels is very important as well. So as you're making those decisions for your digital experience or your phone experience, how you connect that data interconnected between the digital, the MSR, as well as the branch experiences and simulate a seamless flow is important. So you initially might start off with most of your experiences within the core, and then slowly you peel them off as you mature as an organization and create a data transparency across different channels and bring a cohesive experience together, which then reflects members seeing us as one single institution serving their needs, no matter which channel they approach us through.
Yeah, I always say the customer, we should maintain one continuous conversation with the customer, irrespective of the channel.
Correct.
And many specifically financial institutions, they're segmented by digital, mobile banking, branch, but the customer doesn't see it that way. It's one continuous thing.
Yeah, but it's an evolution, like you said, Yoni, in your digital modernization. It's an evolution over time, and stitching those experiences together is critical. And now AI, and you cannot ignore those AI chatbots that are servicing the same information, same transactions
Yeah.
that the different channels over time have been.
And all of this digitization and even partly AI has really reset member expectations. At least for some members, not all members. There are members that are slower to adopt the technology. But as those expectations reset, speed, visibility, and personalization, these are all ideas that are changing and evolving. So when a member then physically walks into a branch, what's still genuinely hard to instrument, and what do you wish you could see?
What we strive to implement, and we are in the process of looking how we can enable this, is when you come in on a digital channel, I can track every transaction, every visit, every opportunity of where your needs might be. When a member walks into a branch, the level of tracking that's enabled in how much did they have to wait? How many times did they get routed to the wrong person? Those are happening in the physical realm, and that data is not necessarily translated into did the member walk out happy? Did we build the trust that they set out the foot in the branch? Because nobody wants to walk in a branch if they can service themselves digitally, right? When they walk in the branch, truly, it is a trust building moment or a moment where they need human support to do that, right? How do you track the level of satisfaction and preparedness for our branches, our representatives, our tellers in there to do that, and orchestrating a continuous experience of, if somebody started off on digital, transferring that context when the teller is servicing you as well. Those are some of the challenges we are trying to navigate through as we stitch these experiences together. And then I do not want to forget the phone channel as well, because again, I've sat with enough reps to make sure that they need the same kind of customer 360 to understand how to serve the customer best without having the customer relay the context over and over and over.
That's it.
Right?
You know, we're touching on so many interesting things, the connectedness, the tracking, what happens in the branch. But I agree with you. Very often, by the time they're coming to the branch, unfortunately, many of them may have attempted to self-serve or fulfill their needs through digital channels. And it is because they were unable to, they're coming to a branch. So there's an expectation that they can just pick up where they left off. And very often, we don't help frontline teams really give the advice that they could by keeping them in the dark.
And we need to enable that. So again, there are many technologies that we are experimenting with, working through, that are in a connected space where our phones, our logins can directly connect to the teller systems and convey the same context so that the teller can pick off. Are we there yet? No. But are we in the process of thinking and developing that? Yes. The connectedness is something we are working on actively.
Yes. And, you know, another point of view, you've got thousands of, let's say, frontline associates, some more skilled than others, some licensed, others not. But amidst them, there are incredible stars. There are those who fundamentally understand how to drive the best outcomes, how to build deep relationship with your members, consult them. And then there are others that need that training. And I find when you don't have visibility into the branch, it's hard to know what are those playbooks that your best associates are invoking to build that experience.
Great point, actually. You bring up a great point in terms of how do you drive consistency and the level of knowledge and education. So every experience is an exceptional experience, right?
Yeah. It was some of the things that we've said in the past. How do you make every branch your best branch? How do you make every associate your best associate?
Yeah, no, very fair. But also, there's another challenge that I see as I look at the different branches. A branch may serve 20 transactions and another branch may serve 20 transactions. But what I don't have visibility into is the level of complexity of that transaction and how
That's
much
right.
time that transaction took. So,
Yes.
again, also understanding that depth of context is important so that you're not just measuring, when you're doing KPIs, you're just not measuring counters and incentivizing the wrong behavior. It's more about trust and doing the right thing for the members. And all credit unions have a mission of serving the underserved. Did you truly serve the underserved? Did you truly build the trust? People helping people is important, is very important.
Law of unintended consequences. Once you start measuring service time, people assume that reducing service time is the goal. But if it comes at a cost of lowering the quality of service, or maybe even continuing the consultation into an upsell, a cross sell, or more education, then we miss the whole picture by just obsessing over one, I would say very often, surface level KPI.
Yeah, you're very right? So understanding what that orchestration looks like across the different worlds is a very
Yeah.
important parameter to look through.
So, why do you think members, or when do you think members still need a human? And then, how do you design systems that protect those moments instead of just trying to aggressively automate them out of the customer journey?
Very, very good question. Financial services is a very touch and feel space for high net worth transactions, whether you're trying to get a loan, a car loan, or yeah, you can automate the heck out of it, and fintechs do that all the time, right?
Yes.
But a touch and feel to make sure that this is the right thing for me and that I have an institution behind me who's protecting me. Your mortgages, those are where there are high touch environments, and having that touch helps. But also complex transactions, or in the financial space, fraud. It is very emotional time when a member's identity is compromised or finances are compromised. Those are times where they need the help. But last but not least, wealth management, right? When our members are growing and maturing through their financial journey, they may want to say, hey, how am I working through my finances the best possible way to secure my future, my retirement? Those are the value-added experiences that make sense in the branch. And I'm not saying it's branch only or digital only, a cohesive experience across those platforms to enable that experience for the members is very important. And understanding that every member's needs may be different, because by the demographic, a Gen Z may want themselves serviced very, very differently over text messages, over chats, a lot more differently than maybe your Gen X or your boomer audience, right? Understanding that as well, and not just saying one recipe fits all. Efficiency and optimization is one thing, but trust and service needs to transcend all those boundaries, and providing avenues for the members in the channel they want to be serviced, not what the institution wants to do, but truly put that member lens on and do that is important part of orchestrating your journeys. So as you're going through your digital modernization, as you start to provide new experiences, monitor those experiences, of course, drive efficiency play, but do not hook out the human aspect, human in the loop. When we say with AI, human in the loop, even with your transactions,
Yes.
is as important, if not, and then hook them out if they're not being used, right? Versus,
Listen, maybe it's a less popular point of view, because I know a lot of people, and by how you say this, I can tell that maybe other people you've dealt with have two sides of the brain. There's the efficiency brain, and then there's the experience brain. There's the labor productivity brain, and then the increased revenue brain. And I think that they very much go together, because where we find new efficiency, whether that's through digital tools that frontline associates use or members interact with, we then give new bandwidth, newly found bandwidth back to your frontline teams so they can focus those precious interactions on advice, on trust through a tricky fraud issue, on wealth management, versus paperwork, admin. Why are you here? Oh, you already opened a ticket online. Those are time wasters.
Very, very well said, right? On how are you servicing the members should where the human focus should be.
Agreed. So I've got a kind of an interesting one that's, I think, more unique to the financial sector than other ones. I think you've worked in some large institutions under merger and acquisition situations. So under the assumption, it sounds like it, Pooja, that you've got a very clear vision on how to engineer systems that work for members, work for associates, and then suddenly you add 100 more branches, 50 more branches, and you got to consolidate everything. Can you walk me through a little bit that challenge? How do you migrate, and then how do you create the same level of consistency as the organization grows?
You bring up a very valid point, and in credit unions, we call it a merger. It's never an acquisition, right? And that is very important. Is bringing cultures together, bringing experiences together, making some very calculated decisions about how you will engineer those experiences upfront as part of your merger strategy is very important as part of engineering that success. It needs to be intentional, not accidental. So as part of technologists, hey, I took this data and I put it in my core system and my merger's over. That's not the way mergers are orchestrated. To your point, if you add 150, 500 more branches, how did we make intentional decisions about what member experiences would look through the transition? And how you would engineer and train the members in the branches or the associates in the branches of the acquired or merged institution to create that same brand experience or a similar brand experience. But also, as you acquire those institutions, learning what's worked best for the members in that demographic, in that situation, right? Because it's interesting, what a member may want in Texas may be very different than what a member wants in Oklahoma, may be very different than what a member wants in Seattle, because the demographic of the people who live there is different. And engineering an experience, not discounting what has worked, enabling and enhancing with the experience that has worked for that institution and what the acquiring institution has are important parameters to consider as you engineer that. Once that is agreed upon, then the technology can enable that. Technology is an enabler, not necessarily the decider of what that experience should be. So those conversations are very important as you orchestrate. Otherwise, you can make or break a deal. Right? Most mergers do not succeed for the reasons that I mentioned, where the heart and the thought process might be missing. So being very intentional about that is important, both for the employees who are being acquired and the members who are being serviced through this.
I love that. I love that. And you used a couple of important words. Intentional, I think, is one. And I think the synonym in this context is orchestrated, because I think once it's orchestrated, it's inherently intentional. And I think that's one of the most interesting problems to solve. And of course, I would say that the core of that is that you've got your systems, your financial systems of record. I think it's this piece where credit unions really differentiate or not. And I think the key is, can you orchestrate that in-person part? Can you orchestrate what's happening with wait times, with service times? Can you maybe help frontline associates in a somewhat standardized way, as you mentioned, maybe different in Texas than somewhere else, how to handle a more complex interaction? I think these are ideas that is the gap that it seems like you're looking to solve,
Yeah,
or
absolutely.
already are solving.
Absolutely. And also another nuance to that is a product that the acquiring institution might have. Is that a relevant product to bring into your fold? Or what products would you service at the end of this, right? Just all those are intentionalities that you go in with and then serve the members as the need is, right? It's not only a growth transaction, it's a service transaction as much.
Yes, this is so interesting. I only have two more short questions. You mentioned integrations in the beginning, and I think that's a really important idea. How do you think about that in a large enterprise? Obviously, in your sector, there's a level of risk with everything we integrate to core banking systems. There's obviously a benefit when we do that and have connected data points. How do you strike the balance between integrating? How do you strike the balance with risk versus return? And then I'd say last thing, how do you think through integrating another system that you'll just have to babysit and it'll annoy other teams because it's yet another thing, versus something that's really material and will drive value?
You bring up a very good question. There's a balance you strike between how you architect. A composable architecture goes a long way in figuring and enabling easy integration. Composable architecture and APIs are time to market that technologists should think about as they're architecting their environments. But from a business perspective, when do you acquire versus when do you build is a very typical question that gets asked for technology executives to say, looking at a partner that can accelerate value to the membership is important, but knowing that it comes with trade-offs in terms of influencing roadmaps for many, many customers that a service provider might have, right? And also the typical, this is across all financial services across my career, acquiring somebody and then customizing the experience to look like yours is a very painful task to work through as well. So understanding what you're bringing in, integrating it as an enabler, not a disruptor, and integrating it in a way where it doesn't need much specialization to come into your environment. It is very composable. So they are not creating a dependency that becomes a risk for your organization on an ongoing basis. Also, as you bring these providers in, protection of data, where they are deployed, DR, all of those considerations have to be taken very, very seriously to ensure seamless member experiences. So I'm a firm believer of having very strategic, fewer integrations that can enable the experience, and then building your secret sauce on top of that is what sets an institution apart.
Love that. That's great. These are such great points of view. So the last real question is, who shaped the way you think about system architecture and the lines from system architecture into member experience?
I think evolution of technology over time and many scars from many projects that you have lessons learned through on potential ROI to real ROI when they're implemented, of course, help shape it. But of course, enterprise architecture views and how data needs to unlock the potential and how you architect and engineer it in a way where it's unlocking you versus holding you back is something that helps shape my view over time. And AI is actually accelerating that journey in a way where you have to, it's not a choice anymore, right? It is a table stakes to get into this world of enabling insights for our business leaders as technologists so they can make accelerated decisions and serve members in an accelerated fashion. And that's what that journey of learning helps shape my perspective on how you engineer environment.
Thanks for listening to the Service Experience Podcast. If you want to see how we're helping leaders close that in-person blind spot, fueling sharper decisions and greater value for customers and the enterprise, visit Qtrac.com.